Welcome to the deep dive. Pull up a chair because we're about to unpack quite a striking projection. A major economic rebalancing seems to be underway in East Africa.
Yes, that's right. According to recent projections from the IMF, the International Monetary Fund, Kenya looks set to surpass Ethiopia as the region's largest economy in 2025.
And you came to us with a really direct question, basically. How Kenya bited Ethiopia? Kenya GDP will be $132 billion in 2025, higher than Ethiopia, $117. Cuts right to the chase, doesn't it?
Yeah.
Wanting to understand the how behind this, well, pretty significant projected shift.
Absolutely. So our mission here is to take the source material you send over, the articles, the data, all of that, and really distill the key nuggets. We need to look at the macro conditions, policy choices, sector performance, infrastructure, investment trends, all the things driving this projection.
Yeah, because Ethiopia, I mean, for a long time, it's been seen as the economic powerhouse there, big population, ambitious state-led development. So this forecast, Kenya taking the top spot, even if it's temporary, it's definitely a moment worth digging into.
Okay, let's set the scene then. Let's look right at those headline numbers from the IMF for 2025 that sparked your question. Kenya's nominal GDP is forecast at $132 billion.
Right.
And Ethiopia is projected at $117 billion. So that's the raw number behind the Kenya surpasses Ethiopia claim.
But hang on, here's where it gets maybe a bit counterintuitive.
Exactly. Because despite Kenya having the larger projected absolute GDP figure in 2025, Ethiopia is actually forecast to have a significantly higher real GDP growth rate for that same year.
That's the fascinating part. The sources put Ethiopia's projected real growth at, 6.5% to 6.6% for 2025. Pretty robust.
Yeah, while Kenya's is projected a bit lower, somewhere between 4.8% and 5.6%.
So, okay, how does that work? How does an economy projected to grow faster in real terms end up smaller in absolute dollar terms just 2 years later?
And this is really the core insight from the sources you provided. The difference isn't just about the real growth rates. It's fundamentally about the starting point, the economic base size, and crucially, factors affecting the nominal GDP calculation, specifically currency exchange rates.
Okay. Yeah. So looking back at the 2023 figures you shared, Ethiopia's nominal GDP was, $163.70 billion. That's substantially larger than Kenya's $107.44 billion back then.
Exactly. That's a massive swing downwards for Ethiopia's nominal GDP projection from over $163 billion in 2023 down to $117 billion projected for 2025.
So what explains that drop?
Well, the sources explicitly note this. They say that stark difference implies the IMF's 2025 nominal projection for Ethiopia basically bakes in a significant currency devaluation against the US dollar, or maybe other major nominal adjustments, and that overshadows the underlying real economic growth.
So that's the key. The projected surpassing in 2025 is driven mainly by this big adjustment in the nominal dollar-denominated size of Ethiopia's economy, tied to currency movements. It's not that Kenya's economy suddenly started growing dramatically faster in real terms that specific year.
Precisely. The shift in the headline number is based on those specific 2025 nominal GDP projections, which incorporate that currency factor heavily for Ethiopia.
Got it. And we should probably touch on a couple of other indicators from the table you sent over too, just for context. Inflation, for instance. Yeah. Hugely different projections for 2025.
Yeah, Ethiopia's forecast is around 21.5%, very high, whereas Kenya's is much lower, predicted between 5.5% and 6.2%.
And GDP per capita?
Kenya projected much higher there too, more than double Ethiopia's figure, about $2,468 for Kenya versus $1,070 for Ethiopia in 2025. So yeah, very different macroeconomic environments being forecast.
Okay, so let's unpack this. If a big chunk of Ethiopia's projected nominal drop is currency related, what are the key drivers positioning Kenya for this potential number one spot?
Well, a major factor the sources highlight is Kenya's relative macroeconomic resilience. Also, its more open market approach, and really critically, its currency performance lately.
And that currency story, especially in 2024, it's pretty dramatic, isn't it? The Kenyan shilling appreciated significantly.
By 21% year to date. It was even named the world's best performing currency at one point.
Wow. So that wasn't just random market movement.
No, the sources connect it directly to substantial foreign currency inflows. For one, there was a successful $1.5 billion Eurobond issuance back in February 2025.
That's basically the government borrowing internationally, right, in foreign currency.
Exactly, issuing bonds. And that significantly boosted the country's foreign reserves. Plus, you had diaspora remittances, money sent home by Kenyans working abroad, hitting a record $4.94 billion. That's a steady flow.
Okay.
And then strong growth in agriculture and manufacturing exports also helped bring in foreign exchange.
So all these things together, borrowing internationally, remittances, strong exports, they increase the supply of foreign currency.
Right, relative to demand, and that strengthens the shilling. And importantly, a stable or appreciating currency, well, that's often seen by international investors as a sign of economic health.
Which can attract more investment.
Precisely. It can draw in further foreign direct investment, portfolio investment, potentially creating a kind of positive feedback loop, reinforcing that macroeconomic resilience.
So it sounds like Kenya's openness, its engagement with global financial markets, that's a key strength here.
It seems to be. And its more diversified economic structure helps too. I mean, agriculture is still foundational, about a quarter of GDP, majority of exports, and recovery is expected there in 2025.
But it's not just agriculture. They've got dynamic service sectors too, right?
Yeah.
Nairobi's tech hub status.
Definitely. Nairobi is a significant tech hub known for innovation, especially things like mobile money, M-Pesa being the classic example. And the sources point to expected growth in fintech, e-commerce, digital infrastructure, that whole area.
And tourism.
Still a major contributor, the third largest apparently.
Yeah.
Growth there has been helped by market liberalization and efforts to diversify what they offer tourists.
Okay. And manufacturing.
That's also evolving, traditionally more agro-based. But there's a strategic shift towards becoming more export-oriented, trying to grab more regional market share, develop higher-value products.
So a mix of old and new drivers contributing to resilience. What about government policy? The sources mention some initiatives.
Yeah, Kenya has this long-term plan, Vision 2030. Aims for upper middle income status, ambitious growth targets, focusing on those key sectors like tourism, agriculture, manufacturing, IT, finance.
And wasn't there a more recent push, the Big Four agenda?
Right. From 2018 to 2022, that targeted universal health care, boosting manufacturing, affordable housing, and food security. Had specific goals like getting manufacturing's GDP share up to 15%, creating 1 million jobs.
But how successful was that?
Well, the sources do contain reports suggesting little progress was made on fully achieving those Big Four goals by the deadline.
And despite the good news on external flows in some sectors, Kenya still faces fiscal challenges, doesn't it?
Yes, the source material points to persistent underperformance in tax collection, meaning the government isn't bringing in as much tax revenue as it plans or needs. And it also mentions a weak connection between rising government spending and economic growth.
What does that mean, weak connection?
It suggests that when the government spends more, it doesn't always translate efficiently into, productive economic activity or growth. So combine that with the tax shortfall, and it leads to heavy government borrowing.
Which can cause problems for private businesses.
Yeah, it can lead to what they call a crowding out effect. Government borrowing might push up interest rates or just soak up available funds, making it harder or more expensive for private companies to borrow and invest themselves.
And we should also acknowledge the recent domestic turbulence mentioned in the sources, the protests against the Finance Bill 2024, and the government pulling out of that big IMF program.
Right, the $3.6 billion program withdrawal. Those events, even if they turn out to be temporary, they do raise questions about policy continuity and stability.
So it feels like Kenya's economic story is sort of strong private sector activity and these external flows helping to buffer against challenges coming from domestic policy hiccups and these structural fiscal weaknesses.
That seems like a fair synthesis based on the material, yes. Now let's quickly look at infrastructure and foreign direct investment, FDI. Kenya's launched some big projects.
They have significant road projects like the Mombasa-Nairobi Expressway. And the source mentions $600 million was secured just in April 2025 for road construction, so investment's ongoing.
And the standard gauge railway, the SGR, linking Mombasa to Nairobi, that gets mentioned a lot.
Yeah, boosting trade, cutting travel time. Sources say it contributed to GDP, created jobs. But
there's always a but, isn't there?
Well, the sources also point out it's been seen as a fiscal liability, meaning its costs, maybe servicing the debt used to build it, outweigh the direct revenue it's generating so far. And plans to extend it have apparently slowed because of funding problems.
Okay. And then there's the really huge one, the LAPSSET corridor project, multi-country regional integration.
Massive long-term potential, yeah. Projected big GDP contribution. But again, the sources are clear it faces challenges, things like political changes in different countries, regional conflicts, economic downturns. They've significantly slowed or even stalled parts of it.
So the theme here seems to be ambitious infrastructure vision, but facing real challenges in implementation and maybe not always delivering the full economic boost or becoming financially sustainable right away.
That sounds about right. What about FDI, foreign investment coming in?
On that front, Kenya shows a positive trend in the recent data provided. In 2023, inflows increased substantially to $1.50 billion. That's a, wow, 282.22% jump from 2022.
Huge increase.
Yeah. And the total stock was $10.4 billion back in 2022, attracting investment from various places. This picture contrasts quite a bit with what the sources indicate for Ethiopia.
Right. Okay, let's pivot then. Let's look at Ethiopia. What factors are contributing to its relative slowdown and the vulnerabilities the sources talk about?
A really central factor and key to understanding that nominal GDP projection shift we discussed has been Ethiopia's currency policy, historically very strict controls. But then a dramatic shift in July 2024.
What happened?
They liberalized the exchange rate regime, and that led to a sharp devaluation of the birr, the Ethiopian currency, over 55% against the US dollar.
Oof. That sounds incredibly disruptive. Was it, like, unavoidable?
According to the sources, yes. It was described as painful in the short term, but ultimately a necessary step to secure major international financing.
Ah, so it unlocked funding.
Big time. It paved the way for a $3.4 billion loan from the IMF and a huge $16.6 billion package from the World Bank. Ethiopia is also working on restructuring about half of its pretty substantial external debt, which was around $28.9 billion.
So the devaluation, however painful, was part of a package to deal with a severe debt and foreign currency crisis, basically getting access to international funds for stability.
Exactly. But as you'd expect, a devaluation that sharp has consequences. It directly fuels inflation. We already mentioned Ethiopia's projected average inflation for 2025 is 21.5%, way higher than Kenya's. That really hits households, erodes purchasing power.
Were there underlying issues before this crisis hit?
Yes, the sources mentioned things like untargeted subsidies, which can be very costly for the government, and also reported corruption in public projects. These apparently contributed to a fragile situation, leading to severe shortages of foreign currency and building up that large foreign debt, even before these drastic reforms had to be undertaken.
Wow. So it sounds like a really complex mix. Internal instability, maybe delaying necessary reforms like the devaluation, created this difficult environment that just shrunk their options and had these compounding negative effects.
That seems to be the picture painted. And beyond the macro stuff, what other pressures has Ethiopia faced, internal and external?
Well, the sources are clear about the impact of protracted internal conflicts. The war in Tigray, starting back in 2020, is described as devastating. It severely disrupted production, trade, just economic activity across the country.
And conflicts like that can have knock-on effects internationally, right? Did it affect their trade status?
Yes, significantly.
Yeah.
In 2022, Ethiopia lost its beneficiary status under AGA, the African Growth and Opportunity Act. That's a U.S. trade preference program.
Ah, okay.
And the sources state this dented the country's ability to grow exports, hitting sectors like textiles particularly hard, which were supposed to be part of their industrialization push. And on top of all that, climate disruptions add more strain, especially for a largely agrarian economy.
So internal conflict had direct economic costs and triggered external penalties, like losing AGOA, a really tough environment. What about Ethiopia's overall economic structure and development model?
Historically, Ethiopia pursued a very state-led development model. Huge public investment in infrastructure, industry, often financed by borrowing. Agriculture was the traditional backbone, but industry and services have been growing their share.
Is that state-led approach still dominant?
Well, the government is currently in a transition phase. They're undertaking privatization of some state-owned businesses, aiming for a more market-oriented economy overall. Though the sources suggest strategic sectors like telecoms and finance are likely to remain under state control. So the recent crises maybe expose some vulnerabilities in that traditional model.
That's certainly what the sources imply. It seems the limits of that model in navigating these complex shocks became apparent, and this transition towards a more market-based system is happening at an incredibly challenging time, complicated by all these crises.
What about Ethiopia's own infrastructure projects and FDI? They have some massive ones.
They absolutely do. The Grand Ethiopian Renaissance Dam, the GERD, completed in 2023. It's the largest hydro plant in Africa, huge potential for electricity exports, maybe $1 billion annually.
Huge potential.
They've also invested heavily in industrial parks, trying to attract FDI, create jobs, boost exports, and there's a Digital Ethiopia 2025 strategy aiming for significant digital economy growth.
These sound like potential game changers for the future. But what's the current trend with FDI coming into Ethiopia?
Yeah, unlike Kenya's recent jump, Ethiopia has seen declining FDI inflows according to the data provided. In 2023, inflows were $3.26 billion, but that was actually an 11.09% decrease from 2022.
And did the sources say anything about whether those big projects like industrial parks are delivering yet?
They did. There's a specific note attributed to the World Bank saying that these industrial parks, despite their potential, have not yet made a significant contribution to GDP or generating the foreign exchange the country badly needs, at least not yet.
It really underscores the point, doesn't it? You can build impressive physical and digital infrastructure, but you need that foundation of macroeconomic stability, decent governance, and peace to actually unlock the economic benefits. Without stability, the returns just get delayed or reduced.
Absolutely. So let's try and bring this all together, compare the two paths. It really is a picture of two major East African economies with different structures facing very different challenges, making different policy choices, leading to these quite different near-term projected outcomes.
Yeah, the headline shift in the 2025 nominal GDP projection is the attention grabber. But the story underneath is how Ethiopia's deep and apparently necessary currency devaluation dramatically cut its dollar-denominated economic size. And that's overshadowing its faster real growth rate for that specific year. That distinction is crucial.
Totally crucial. And the contrast in inflation rates tells a story too. Ethiopia grappling with over 21%, Kenya managing around 6%. The currency directions are completely opposite, the shilling strengthening, the birr weakening drastically after that devaluation.
And the FDI trends mirror that, moving in opposite directions. Kenya seeing that big increase, Ethiopia seeing declines recently.
Policy-wise, you see Kenya, despite its own domestic fiscal issues, kind of leveraging its more open, market-responsive approach and its links to global finance. Ethiopia, meanwhile, has been forced into this really painful, complex transition away from its state-led model, primarily to deal with these severe currency and debt crises, all while navigating significant internal political turmoil.
And how they've handled shocks seems different too. Ethiopia's internal conflicts and losing AGOA had these really severe, wide-ranging economic consequences. Kenya, while facing its own political and fiscal challenges, seems to have had more buffering capacity, maybe from its diversified services sector and those external financial flows.
Yeah, the development models reflect that difference as well. Ethiopia's history of heavy state-led investment versus Kenya's more market-oriented structure both built impressive infrastructure, sure, but the sources really hammer home that realizing the benefits depends so much on maintaining stability, something Ethiopia has sadly lacked recently.
So yeah, this rebalancing, it's definitely more than just a single GDP number for 1 year. It reflects these fundamental differences in managing macro conditions, the impact of policy choices, and just the resilience to internal and external pressures.
And as the source material seems to synthesize it, Kenya's relative resilience appears to come from that diversification, the open markets, the strong engagement with global finance, Eurobonds, remittances, exports. These helped absorb some of the hits from domestic fiscal and political issues.
Whereas Ethiopia's slowdown is down to this perfect storm almost. The necessary but painful devaluation and debt crisis, made worse by sky-high inflation, compounded by the terrible effects of internal conflicts and losing that key trade status. And all these pressures have just hampered the economic payoff from their big infrastructure projects, at least the short to medium term.
Exactly. So the really big takeaway from digging into these sources is how powerfully this projected rebalancing highlights the critical importance of, well, sound currency policy, fiscal discipline, and political stability. These things fundamentally shape a nation's economic path and its standing relative to its neighbors.
A stark reminder of how interconnected all those factors are. This has been a really fascinating exploration of a major economic shift happening in East Africa. And thank you, sincerely, for providing the source material that allowed us to do this deep dive.
Our pleasure. It's a compelling story.
It really is. Now, here's maybe a final thought for you, the listener, to chew on. Given that Ethiopia is actually projected to grow faster in real terms in 2025, and you think about the long-term potential locked up in things like the GERD dam, assuming they can overcome the current massive challenges, and considering its large population, how might this rebalancing continue to shift in the years after 2025? Is this projection a permanent change in the economic order there, or is it more like a temporary fluctuation in what's going to be a much longer economic race?
That's the multi-billion-dollar question, isn't it? And it's what makes watching this region's economic story so incredibly compelling going forward.